Welcome into the crypto bunker. Today, just wanted to give you guys a quick update on what's going on with the markets. And what we're really looking at here, and I'll just start right away, is Ethereum. And you guys know I'm mainly an Ethereum analyst. So I don't focus nearly as much on Bitcoin personally, just because that's the only thing I own basically at this point is Ethereum. So it is my main focus. I do think that if you have a long-term mindset with this, you will do well in Ethereum. And probably what most of you want in reality is a bear market, because then you can accumulate more. So just make sure you have some cash on the side, or you're just doing a side hustle or something so you can begin to accumulate. But what we have here is a few things. Okay, so we have the 200-day moving average, the 200-day SMA, the 200 SMA, I should say, special moving average. What we have is a breakthrough of this, and then a test and a rejection and a rejection. We had the bulls come in here and try to do something a little bit, but what this is called is a bear pennant. So why it's called a bear pennant is because you have this pole, okay, and then you have a pennant that is formed here, where we weren't able to break above this top line. We were rejected there. So that's what we really needed to bottom out. We needed this to strongly break out through this, and then a follow through. I did think there was a possibility of a short squeeze, but what makes this a bear pennant, we can see this is sort of what they call a muddy trench. And in a muddy trench, you will have the top line resistance and the bottom line support. And then you will have the muddy trench line. And the muddy trench line is where most of the action is received. And so we see we have resistance, resistance, support, support, support. And then we've just broken through. Not only that, we have broken through on a bigger candle. And so this is what they call a follow through of a bear pennant. And a follow through of a bear pennant, you want to take the measured move of the entire pole and you want to adjust it here. And so what we're looking at as a possibility of around 2,400 to 2,450. And I just want to emphasize that, the last two times, or I should say the last time we went under the 200-day, we immediately rose up. We were rejected a little bit. We went down again, and then we immediately rose up. So we've never really used it as resistance in the way that we have used it here as resistance. And so to me, that's our first sort of signal towards a bear market. And we can look back at the last time this may have happened. Here is this right here. So we were rejected and we came down here. And so then we were sort of rejected again there. And then we just trailed below the 200 for a long time. This is something that I actually do think is possible, unfortunately. I think we've seen sort of the bull market play out. We've seen our three peaks. We had 1, 2, 3 peaks there. Here we had 1, 2, 3 peaks there. And it's harder to do, it's harder to make these, go as high as we thought they would with all the value that has to come into the market. It never really made sense. So, I apologize for being such a perma-bull, but that's what happens when you get inside these markets. And so I did just want to highlight that. I also wanted to highlight the weekly chart. What we can see is usually when you have these moving averages closer together, that's actually when you want to accumulate. And when they're farther apart is actually when you want to sell. And so as we can see, they've gotten very overstretched here. And so this isn't a place that, for me at least, I want to be buying. Like I said, I might put an initial bid for that bear pennant target, and then just see sort of what it plays out as. But we might just form another bear pennant. I'm not sure. This is not what a bottom looks like. A bottom, you would want to rally up above 3,800. You would want to, maybe even get to 4,000, test back, and then resume. This is sort of a little bit of a flatter bottom. Like I said, it's a bear pennant. And so, what are potential targets for a bear market? Well, we have the weekly. So let's see. We did get down, this to the weekly on in that bear market. So we have about $1,000, and that would be an 80% correction from the top, which is usually what we see in bear markets. This will take a long time to play out, and I do want to say that's possible that doesn't happen. But with the Fed tightening into slowing growth and into possibly slowing inflation, I think we've seen peak CPI numbers. And so if they make that mistake, we have what we would call a quad four scenario of slowing growth and slowing inflation with a tightening monetary policy. So that's not good for anything. It's not good for stocks. You can look at my previous videos that I did. They were pretty accurate on looking at some of these, excuse me, markets, like Microsoft, that has now sort of gone into this this bearish trend. And this is not something you want to see as this big of a rejection here. And so once again, we have what we see as widening gaps, right? So this is where you want to accumulate, where these are sort of closer together, and these are very wide. And so the 200-week SMA is around $200, and I would not be surprised. I mean, yeah, it sounds crazy. Maybe not. Maybe we go down to this moving average. I'm not sure, but I think this actually could be a sort of drawn out bear market. People aren't used to that. So what you want to do is you want to have cash. You want to have some physical metal, consumer staples. You want to have utilities. For me, I'm personally accumulating real assets, things that people need, energy, uranium, seed companies, for example, Bayer, which has gone through, let's take a look at Bayer real quick, because, I think this is an interesting company because it's just been beat up for so long that, maybe it's a recovery is in the works here. As you can see, it's just been brutally battered and beaten for years. And so we've kind of just been in this. But I believe we could have seen a triple bottom here because, Bayer is sort of like a old time value stock. And what I find interesting is they own 38% of the world's seed production. Seeds, they just own 38% of the seeds. And that's something that I want to be in for the future. I do think we'll have some issues with food production in the future, as well as energy. I actually do think we're going into a global cooling phase. I know that sounds also crazy. Do your own research, but yeah, I want to own things that have to do with food production, energy, because I do think that food and energy will be sort of a couple issues that will come up this decade. So anyway, yeah, have probably a 30% cash position. I'd say 30% staked ETH, maybe 10% precious metals, maybe 10% energy, and what other stocks that you might like that are value. And yeah, it's tough that it didn't exactly play out the way we wanted. This is, it's unfortunate to see, but you kind of just have to accept what's going on in the market, and you have to adjust accordingly. So hopefully you guys got something out of the video, and like, subscribe if you haven't, and have a great day.